trade dissection and analysis, you've come to the right place. My name is Pat Mitchell, and I have been a professional day trader for the past 11 years, and I'm here to give you exactly that. Professional level, high quality day trading education, all here for free right on YouTube and X. So today we are going to be discussing basically one full scope of the trade, like one full trade, but executed 3 times. And I'll explain. And also, today was a live trading day. I do run a live trading group where I work with a very small, focused group of traders, day traders, and we execute trades that they wouldn't normally get involved with themselves. Today was the first day of an 8-week run. We day trade live twice per week. And the rest of the week, I'm running regular screen share. And let's get into it. So I hope you all had a really solid day. I know we did. Give me 2 seconds. Just going to grab my charts. And there we go. So the P&L today is on the smaller side. When I'm starting out with my live trading group, I work the same size that they would normally be trading with. As well as on the secondary trade, I might use a little more size, but it's still very small size for me. But it shows people what is possible with small size, 20 contracts, nothing major, nothing that people can't handle over time. And you're still locking in a very respectable $735 on the day, basically working one chart over and over again. And it's a way to show people that this is possible. You can, in fact, pay your bills doing this. And let's discuss the trade. So the way we were shaping up here this morning, we gapped down, but we actually remounted. If you take a look at the daily chart here, we remounted the low of range level on Qs. And that's important. That's a big deal. If this was truly on the weak side, it would gap below that, but it didn't do that. It actually held that. So we did, and we always do, have trade plans for a long and a short. These levels, these blue levels that you see placed here, these are placed prior to the market opening. And you may look at this and you may be thinking, well, that looks like it pretty well triggered that short. No. So this was 40 cents away from that level, which normally wouldn't be a big deal. We absolutely would be starting into that. The problem is the risk on this. So the risk, you would basically have to risk off of this pre-market high level, which is also just a break of yesterday's highs. So you can't stop out before that. If you do stuff like that and you're basically dictating to the market where your stops are going to be. That's not how any of this works. If you do that, you will have random results. So what you need to do is follow a strategy. And it has to do, especially if we're day traders, we work mainly off of, mostly everybody should be working off of technicals. And those technicals, if it is out of risk parameters, you have to wait for it. And the bare bones, like entry, like the very first spot that you could possibly enter on this was at that level. Normally we would be entering into the level, but that is not the case here today. It was too far. So simply waited for the long. It sells off, comes down into the low of previous range or low of range here at 466.43. We execute that trade coming into that level. The very first trade, you'll see the very first execution. It's getting traders used to executing, even though it might be close. It's executing into that level, no matter how scary it may be. So we all executed that trade together, and then we paid ourselves on that first push. We locked in actually a really nice trade on that. And then from there, I'm working the trade and I'm working the chart. It comes down. We are above support. Therefore, I will go long into support. SPY is above support. And my risk on this one essentially would have been pre-market lows. But I'm going to give you guys a little piece of advice. When you guys are working both charts like this, SPY and Qs, there's a reason why I trade those day in and day out. And that's because it's the markets. And either one of these is going to follow the other one or vice versa. So because SPY at that time still had distance into its support level, I would be giving cues no matter what it did, no matter how it broke this. I would be working it until, and I would not stop out until SPY confirmed a breakage of its support. So a lot of people, a lot of traders, where they make the mistake of risk and how to stop out, they're looking at that singular chart, and they're not looking at the market more from a macro uh, perspective, and that's a big problem. That's why you're constantly stopping out too soon. You're not recognizing that although your chart, your ticker, your stock might have broke that support, it doesn't mean that the rest of the market is weak and it's going to continue to sell. It is a different way of looking at confirmation. So, with that said, entered into that level. Uh, Once it confirmed, you'll see that secondary entry, and then just paid myself all the way back into that level. Once it came into that level, that is my target, and I'm out. Now, what I'm doing is I'm waiting for it to confirm yet again. And it pulls back straight from high of day all the way, almost straight down without any big retracement. Therefore, I know I'm going to be able to get some sort of a reaction. Now, I don't know how big that reaction is going to be. It's not about a big reaction, it is about a reaction. High odds of success. And that's what I did. Executed right into that level. As soon as it came and touched that level, that's where I executed. And if it, you might be asking the question, well, what if it didn't touch that level? Then I wouldn't have taken the trade. It's not worth it, because I don't want to chew back and risk a red day for one more trade. I'll never do that. That's how professionals look at trading. They will never risk the profits. They will risk some of the profits, but they will never risk all of the profits that they have already made. And that's where so many of you are making the mistake. You'll execute a beautiful green trade, maybe a secondary beautiful green trade. You'll take the third, and then you're red on the day. Like, at what point are people going to stop banging and beating their bloody head into the fucking wall before they realize that they can no longer do this? This is something that needs to be done correctly. If you're not going to do it correctly, there's no point in trying, because you might as well just go throw your fucking money out the window, because that's what's going to happen. This needs with a capital N. It needs to be done properly and professionally at all times, or you'll fail. Simple as that. It really is. So if you want to learn how to do this professionally, come to tricktrades.com and work with a coach that actually gives a shit and wants to see you succeed. And if not, continue to enjoy my free education right here on YouTube and on X. No problem. It'll just take you longer. But if you want to get this shit done as quickly as possible, come to tricktrades.com. If not, I will see you here. And for those that are going to pull the trigger, I'll see you tomorrow. Adios, folks.